Hi, everyone. Welcome to the Future of Finance podcast, where we break down investment strategies to help you live a better financial future. I'm your host, Marissa Wood, financial advisor and one of the owners of Union Financial Services. And today we're going to discuss one of the most misunderstood words in retirement planning, and that is annuities. Now, to help us unpack the truth behind these investment vehicles, we're joined by my business partner, Lisa Green. Now, before we dive into a little bit of talk around the truth of annuities, I'd encourage you to please subscribe to our channel, whether you're watching on YouTube, Spotify, Apple. And if these are the kinds of concepts that you like and you want more content like this, please like, share, comment so that we can continue putting out more content like this. So welcome, Lisa.
Hi, Marissa.
It's good
Great
to
to
have you.
be here, as always. Thank you for having me.
Had to have you. You're the annuity queen.
It's my favorite investment.
Yeah.
And I think that annuities, people are going to learn about annuities today, and you're going to have some questions answered. Annuities are an amazing investment, and I'm thrilled to be able to share some information with you.
Absolutely. Now, I have a funny question to kick things off here. Have you ever bought one of those lottery tickets, those scratch-offs, where you have the opportunity to win $1,000 a week for life?
Of course. Who doesn't love those?
And
They're
didn't you
great.
want to win?
That's exactly what I wanted to do.
Exactly. Yeah. I mean, who wouldn't want $1,000 a week for life?
Right.
Waking up on a Sunday knowing you have $1,000 coming in that week, and again the next week and the next week. Well, guess what? That is a classic example of an annuity. Those $1,000 a week lottery winnings, that is an annuity payment.
It is. That is exactly how you would define that. And we all want that. So let's
Absolutely.
talk about how people can get an annuity for themselves.
Yeah.
We'd all love to win that lottery, but realistically, we're not going to.
Yeah. I mean, if you've ever wanted to win a lottery winning such as the $1,000 a week for life, or if someone offered you a pension, wouldn't you want to take it?
Pensions are great. Unfortunately,
That's
they're
an
becoming a
annuity.
unicorn.
Yeah.
That is an annuity.
A pension is an annuity.
Yeah. So we've
Social
already,
Security, an annuity.
Right. So we've already broken down some barriers on what is an annuity.
Mm-hmm.
Why do people say, oh, I don't know about annuities?
Mm-hmm.
Now you're going to learn a little bit more about that dependable payment that an annuity can provide.
Yeah. So, I'd encourage everyone to open your mind up, because if you had a preconceived notion about an annuity, but you are a fan of lottery winnings, pensions, social securities, you might secretly love annuities and you didn't even know. But we're going to go more into it today because they're not for everyone.
True.
They're for a lot of people.
That's true. That is true. Well, I have a question for you. What are the 3 guarantees in life? I did say 3.
Mm-hmm. Yeah, I mean, because I've heard the question asked, what are the 2 guarantees in life? And that's usually death and taxes.
Death and
right?
taxes. Mm-hmm. Death, taxes, and an annuity. 3 guarantees. That word is a pretty strong word, and that is one of the things that an annuity can provide, guaranteed income. That's one of the great features of an annuity. So having said that, did you know that annuities have been around since the Roman times?
Wow. No, I did not know that.
The annuities have been around since the Roman times. They were used in the 18th century.
Wow.
Yeah, and they provided income for those people that invested a certain amount of money. So for some people to say, oh, I don't know about annuities, I don't know. Well, they've been around for a very long time, probably longer than any investment that we have available to us.
Wow.
And of course, they're a little different than when they were in the Roman times.
Yeah.
And that's part of the joy to explore what an annuity really is in this year. The features, the different ways that you can use annuities, the different types of annuities. There's so many different available features inside an annuity. It would be mind-boggling for the average person to say, oh, wait, it can do this for me, it can do that. It really can. They really can do so much for pre-retirees and retirees. We like to talk about the evolution of annuities. And I like to compare it to the beginning of the cell phone. So years ago, maybe 30, 35 years ago, when the cell phone first came out, it was in a bag and you carried it on your shoulder like a purse, but it had a spiral cord and you plugged it into your cigarette lighter in your car. Those cigarette lighters, right?
Oh my gosh.
And so that was the beginning of it. Was called a car phone, but it was a cellular phone. So basically, you could talk on it. All right. Now, as we know, the cell phone went from a little flip phone. It went from just having, a keyboard like what it would be on a telephone, and now it is a mini computer that we carry around with us at all times. Yeah. And yes, it still has the basic feature of calling, but wow, it can do a whole lot more. And so that's my little bit of an analogy with annuities. Yes, it still has that feature of paying out money, but boy, are there so many features involved in annuities that each person should be able to investigate a little bit for themselves by talking to an advisor and finding out, how can this work for me? So the cell phone, certainly different than it was years ago. Yeah. The annuity of today is certainly different than it was years ago.
Absolutely. That's a good comparison because, the annuity you can buy today is not the annuity your grandfather had,
right.
Just like the phone.
That's right.
And I think it's an easy way to explain it that a lot of people can probably relate to.
I hope so. Yeah.
Yeah. I mean, annuities truly are taking off right now. I mean, what were the sales over this past year?
$450 billion in sales.
Crazy.
So all those people are getting in on a great investment. They know. They've been shown and they know. $450 billion. And every year that seems to increase. Sometimes it's increased by 5%, 8%, but that is a huge part of our financial industry. Now, of course, we know that the baby boomers are retiring or already in retirement. So a lot of these annuities are really tailored towards those people. But there's still annuities that are good for young people.
Yeah, I mean, I personally own some annuities, and I know people might think that's crazy. Why? You're nowhere near retirement and needing an income stream and planning for legacy. I understand that, but I want to diversify. I like to have a little bit of money that I know is protected. And especially with a retirement account, I can't touch it until I'm 59 and a half anyways. And so why not have a couple different buckets, have some that's fully protected, and then have the majority of my money exposed to market volatility in the stock market. But yeah, I mean, this is not only for those in their 50s, 60s, and 70s. We can talk about annuities way before that.
So you mentioned a word twice in that last sentence, protected. So let's go back a little bit and talk about what is so attractive about annuities.
Yeah, so that protected term is really where the key is with an annuity. It is protected from market losses. You have a floor built in that you're not going to suffer that 20% stock market loss like you would in a mutual fund or a brokerage account. But really, before we dive into the features of annuities, let's talk about the different types, because just using the word annuity as a broad term can be a little misleading in and of itself because there's so many different categories of them. And when someone makes a blanket statement about an annuity, it's like, okay, well, which one are you talking about?
Right.
And then let's have a discussion. Right. And so really, there's two main umbrellas of an annuity. There's the immediate annuity, and then there's the deferred. Now, the immediate annuity, I will say, it can be somewhat outdated now. It still has a place in some people's portfolio, but we're kind of moving away from that strategy with most clients, because what an immediate annuity is you're putting in a lump sum of money and immediately receiving an income stream from that. And it's irrevocable.
Right.
It turns onto an income stream, and that is the end of the story.
Mhm.
Whereas with a deferred annuity, you have so much more flexibility. You can wait a year, 5 years, 10 years, however long you'd want to start taking withdrawals and begin receiving income. And in that time, your money is growing, and it's growing tax deferred.
That's huge. That's a very important point.
Mm-hmm.
So tax deferred, let's compare it to, say, if someone invested in a CD. How is that treated for tax purposes?
Well, you get a 1099 at the end of the year based on whatever interest you earned in the bank.
So you must pay that tax that year.
Mm-hmm.
Tax deferred means you can put that off for a future date until you decide to take income.
Mm-hmm.
So all of your money is working for you.
Mm-hmm. Yeah, none of it's getting eaten up by
Big
taxes
advantage.
every year. Yeah.
Big taxes are on the top of everybody's head these days. I mean, everybody's worried about them. So, well, now we've talked about protection from an annuity
Mm-hmm.
that you get with an annuity. Now we talked about tax deferral.
Mm-hmm.
So that's two pretty big features.
Yeah.
Mm-hmm.
Yeah. And so the deferred annuity umbrella actually has a couple subsets of that as well. The three most common would be the variable, the fixed, and the fixed index annuity. So those are all subsets of a deferred annuity. And to give you, 30 seconds on each one without diving too deep, your variable annuity doesn't have full protection. It has protected of principal, your initial investment, but your earnings are subject to market risk. So variable annuities, usually not our first pick, but it could work for some people. They tend to carry high fees as well. So that wouldn't usually be our go-to.
What's our go-to?
The index annuity.
Why is that?
So the index annuity has more growth potential than a fixed. Fixed is a set interest rate. So if it's paying 5%, you're making 5% a year. Nothing more, nothing less. An index annuity has the ability to participate in market earnings up to a cap with full downside protection. And so you kind of get the best of both. When the market's having a good year, you benefit from it. When the market has a bad year, you don't lose any money.
So this is even getting better. Now, when we say we like annuities, now this is amazing where you can participate in market upswings,
Mm-hmm.
but fully protected from market downturns.
Yeah.
So you've got growth and accumulation, protection, tax deferral. It's getting better and better.
Yeah. And so I would say most of the time when we're talking about an annuity, we might be referring to an index annuity.
Mm-hmm.
They all do have their place in the world of investing, but the index would probably be our favorite.
That is the most popular
Mm-hmm.
investment in the annuity world and has been for the past few years. And it's going to continue to be because we're only touching the surface on some of these features inside, because everybody has different needs and everybody has a different time horizon. Everybody has different amount of money and what they need this annuity to do for them. So we like to say you need to have a discussion with a financial advisor before you decide or not decide on an annuity. It's a true personalized discussion and a personalized plan that can work for certain individuals in certain aspects of their life.
Yeah, I mean, it is personal. And, before we dive even further into examples on how these annuities work, I would recommend anyone that's listening to this, if you have an annuity question or you might have heard something and you want verification on it, go to our website, union-financial.com. Click schedule a meeting. You can book a complimentary phone call, Zoom call, or meeting with myself or Lisa to get your specific questions answered. Always complimentary. We are here to provide education so that you can live that better financial future.
Yeah, and on that same note, say if someone has an annuity that may be 10 or 15 years old, well, let's revisit what the features inside that annuity are.
So true.
Because as I said with the cell phones, I don't want that flip phone anymore.
Mm-hmm.
I want my little computer in my hand.
Yeah.
And so maybe that annuity that is 15 years old might be a little bit outdated and could serve you better with an upgrade.
So true. Yeah, that's a great point. Now, I want to share an analogy with our listeners today that really does put a nice visual on how your earnings in an index annuity work. And it's a rock climbing analogy. Now, I'm not a rock climber by any stretch.
Zip liner.
Yeah, I do love zip lining.
That's right.
Yeah, that is true.
Yeah.
But, I'm not climbing the mountain to get there.
Okay, not yet.
Yeah. And so with rock climbing, let's say, you're getting up that mountain and you have all the safety gear on. Thank God. You have your helmet on, you have a harness, you have the safety clips and the rope, and you might have one of those stakes that you can drive into the side of the mountain to lock in. And every time you gain a new elevation, we'll call it every 5 or 6 feet, the rock climber drives the stake into the side of the mountain, clips in, locks in, ensuring that that elevation they've just gained can't be lost if they have a, unsteady foot or they grab the wrong rock moving forward. They're ensuring that the elevation they've just gained locks in. Well, that's the same with an index annuity. Every year, the interest you've earned gets locked in and cannot be lost due to future market downturns.
Another great feature.
Yeah. Mm-hmm. So you're climbing up that mountain, and it's going to be more of that slow and steady climb than someone free climbing without the heavy gear on and without having to stop every 6 feet to lock in. But that person without the safety gear, they're one wrong move from falling to their death. It's usually better to have that slow and steady, especially when you're approaching or in retirement.
Of course. It's a smart thing to do.
Mm-hmm.
So now we've really added another feature, that locking in of the gains. The list is getting longer.
Yeah. And so let's say, that rock climber, they made it up to the top of the mountain. Now they're at the top. Well, now what? That was the growth part of the annuity. Now that you're at the top and you want to start going down the other side of the mountain, now it's time for the income annuity. And that is a feature that can be added to an index annuity that can guarantee you some income to sustain your lifestyle in retirement and get you down the side of that mountain.
So let's talk about the biggest fear in retirement. Running out of money, outliving your money. That is the biggest fear. So imagine you're climbing that mountain all those years, accumulating your money and accumulating and locking it in, and it's tax deferred. And then you get to the top, you're at retirement. And now you have to go down and you have to make sure that you don't outlive what you've accumulated. Well, the annuity will help you do that. The annuity has a lifetime income benefit guarantee. That's something that needs to sink in for a minute. So for those people that retire and they're 65 and they're looking forward to traveling and spoiling their grandkids and doing all the things that they wanted to do, golf and boating, well, how much can I spend? Am I going to run out in 10 years? Is my spouse going to be okay if I pass away? These are really, really big concerns, and everybody should have them. That's why I think everybody should have a lifetime income annuity for a portion of your portfolio. Let's address those everyday expenses. You'll have your Social Security. You may have a pension, probably not. But to have a source of guaranteed income that you will never outlive takes that burden and that fear off of your shoulders and puts it somewhere that it's going to work for you so that that retirement can be what you dreamed of.
Yeah, I mean, annuities are the risk mitigation tools. You're transferring that risk of outliving your money to the insurance carrier that issues the annuity, because they have to keep paying you forever. And it's funny because we found that those that have an annuity sometimes will live longer because they aren't stressed, and maybe they're trying to get one over on the insurance company and beat them, maybe. Or it's probably just because they're not as stressed and they can enjoy their life and they can spend their money freely because they know they have their living expenses covered.
They do. And some people have their travel expenses covered, so they can enjoy themselves. It's funny, when going back to the Romans, I did a little bit more research on that. And the Romans actually, back in the 18th century, tried to forecast life expectancies back then so that that annuity can pay out for their lifetime. Now, those Romans didn't live that long, okay, and especially if they were in battle.
Yeah.
But we as a society are living longer than generations before us.
Oh, yeah.
And we need to have that money sustain us for as long as we live, and maybe then even as long as our spouse lives. So to tell people that there is such an investment is the greatest joy that I have, because I will tell you, hands down, an annuity is my favorite investment, has been for a very long time. I can't count how many I have because I have them for different reasons. You know, there are annuities that not only provide lifetime income, but they actually have healthcare features, which I could do a whole segment on, but that's also an option. There are annuities that actually have enhanced death benefits. Like, what is that?
Like a substitute for life insurance, right?
Exactly. You know, so like you said, immediate annuities, fixed annuities. There are so many different types that I find I would be hard pressed that one of those types of annuities wouldn't fit into every retiree, pre-retiree, somebody that's maybe 15 years out. You know, let's look at that future and let's see how a portion of your portfolio, once again, it's always a portion. And of course, it always depends on each person's individual situation. But there are a lot. And I'll bet you that there would be one that would fit most people's needs. You even said,
yeah, there was one
in
that
your
fit,
young
that
age.
fit my need. Yeah, actually more than one. I have more than one.
See?
Yeah.
Yeah.
Now, you know, our topic today was all around, I don't know if I need an annuity. Should I look into it? And that is something that a lot of our clients come to see us about, wanting more information, not knowing if a certain financial vehicle fits into their plan. And that's our job. But sometimes we'll meet with people that know exactly what they want, or they think they know exactly what they want. Tell me a story about one of our clients recently. We'll call her Mary Smith.
Right. So Mary Smith worked for an elderly lady as a caretaker. And part of her job, she helped her pay her bills, and she just helped her along the way with everyday tasks and a little bit with the financial paying of bills and savings and this and that. So Mary realized that her boss would get checks every month, okay, from Social Security. She did get a check from her late husband's pension. And then she also got this check from an insurance company every single month. Very reliable, very dependable, the exact same amount of money. And Mary would help her boss, you know, put this money aside and put it into the checking account. And finally, one day, Mary said to her boss, you know, Mrs. Jones, I've been working for you for over a year now. Do you mind me asking? I know what the Social Security check is, and I know what the pension check is. What is this other check that comes every month, like clockwork? And her boss said to her, well, that's my annuity payment. She said, years ago, my husband and I invested in an annuity, and it paid out lifetime income. So our client's ears perked up. She's like, lifetime income. She said, yeah, it paid out for my husband. And then when he passed away, it continues to pay out for me. And our client then said, I think I need one of these. So, of course, she went home to her husband and rattled off, the fact that this money comes in every month and it's dependable and it's reliable, and she's never going to outlive it. It paid off until her husband died. Then she continues with the payments. So this particular client, Mary, was so excited when she met us. She met us at an educational event. And she said, you helped explain the annuities a little bit more so that I can get my husband in here and we can investigate how this could work for us. So we were so happy because she watched firsthand this annuity pay out for a person throughout her lifetime. And she was so excited to see what it would look like for her.
Yeah.
Her husband's excited too because he sees what it looks like for him.
Yeah, he's now officially a fan as well. And
that was
exciting.
Great because it was life experience that Mary saw working. This annuity was working at its best and doing exactly what it's supposed to do and what they do. And then she saw what it would look like for her money, for her age, for her lifetime. And it has more features now than what her boss had in hers. And we were happy to show her, and we're happy that she has it.
Yeah. And that is one of the things that's so great about being independent too. We're able to access dozens of different insurance annuity carriers, so we can shop what the right product is going to be for that client. And we can run those illustrations so that they can see projected income amounts for their age and their amount of money, and really customize the right plan for that specific client. Makes our job easy, really.
Yeah. So you mentioned an illustration. So just give a little.
So an illustration is really just a hypothetical projection on if I invested $200,000 and I'm 60 years old, what kind of income could that provide me with if I started income at age 65? And it's in black and white. You can see the exact number, and that gives people such peace of mind because if they know, okay, I'm going to be able to collect, we'll pick, $20,000 a year for life and add that to my Social Security, then I know that my bills are going to be paid, or I'm going to have this amount of a gap, and then we fill it in with other investments.
It's nice, and that really does give people peace of mind because they can see it. The variables are your age, your amount of income that you need, your amount that you have to invest, and it can be tweaked along the way. If you say, well, nobody ever says, I don't need that much.
No.
If you say, I need a little bit more, well, then we may have to allocate a little bit more to that investment in order to pay your bills, let you go on vacations, and have that peace of mind. And it's a simple process, and it's part of the joy that we get when we meet with clients and we see their eyes light up and they feel good that, oh, I will be okay. I will be able to enjoy my retirement. It's a real pleasure.
That's the goal. The core driver of annuity demand is that ongoing need for retirement security. Everyone wants to know that they're going to be okay. So as long as people have any fears at all in retirement, annuities are going to be around in some way or another. Once again, they're not for everyone. We're not making a blanket statement saying everyone needs an annuity. You might not. But if one of these 4 things are a concern for you, then it's probably worth exploring or having a conversation about an annuity. Those 4 things being you're concerned about longevity, you're concerned about market volatility. You don't like seeing when the market's down or when you turn on the news and everything's red. That makes your stomach drop. You're concerned about long-term care expenses. I mean, we all know how expensive that can be.
Yes. It can decimate a retirement plan. It can just devastate it. It can ruin it. It can just be that one expense that people weren't expecting, but we don't know what our paths are in life. We don't know. So we have to have some sort of a safety net in place. And an annuity can provide that as well.
Yeah. And then the last one you had briefly touched on too is you have a concern about what's going to happen to your spouse when you pass. And are they going to be okay? Are they going to be able to manage their finances and have enough income? That should be a fear for most married couples.
It should be, because inevitably one of them knows more about the finances than the other. Well, we try to educate both spouses, and we try to give that information. Well, if your husband dies or if your wife dies, this is what it may look like for you in the future. And once again, having that sustainable, guaranteed income stream, it could be a changer in, okay, if the worst happens, well, I still know that I'm going to be okay financially. That's a big, big worry off people's minds at a terrible time.
Yeah. We recently had a few clients that I can think of, and the husband was really great at managing their stock portfolio and had been kind of a DIY investor most of their life. And we totally respect that. We understand that that is some people's passions, but they approached us with their spouse because they said, when I pass, my wife doesn't know how to manage this stock portfolio. I want her to have an annuity to pay our bills, because then I'll be able to sleep at night knowing that she's okay. And so that's a pleasure that we can help couples like that.
Yeah. So I think that we've maybe piqued some people's interest. I would hope so. And I would hope that people think, do I want to investigate that annuity a little bit further? And we talked about lifetime income. We barely touched on the long-term care feature, the healthcare feature that some annuities can provide. That would be a whole other episode because once again, that is a passion of mine. We know that we're living longer, so we touched on all the different things. We have some clients that like just a fixed annuity, and you mentioned that earlier, and that is the guaranteed interest rate for X amount of years. And some clients like to ladder those fixed annuities. They like to have a 2-year term, a 3-year term, 4-year term, and that is going to be their retirement income. That's also an option. So there are so many different types that you would be doing yourself a disservice if you didn't look into the different types and let a financial advisor show you how it could look for you. It's a very, very simple process. And then, we investigate what your needs are and how those annuities may or may not work for you.
Yeah, I mean, they haven't sold 450 billion of them this year for no reason. They serve a purpose.
And that number keeps going up and up every year.
Really is.
450 billion is a lot.
Yeah. So if you're listening to this episode or if you're watching on YouTube and we have piqued your interest, or a couple of those things that we talked about being concerns for our clients are a concern of yours, let's have a deeper conversation. Let's go into this and answer your specific questions. And we can do so by you heading to our website, union-financial.com, clicking that schedule a meeting button. You can send us a request for a phone call, a Zoom call, an in-person meeting. It can be 30 minutes, 45. Usually that first call is just an introduction and us answering your specific questions. Always complimentary. And if that's something that you'd be interested in, please give us a call, give us an email. We would love to have a conversation with you and dive into your situation a little bit better, because our goal is to help you build that better financial future.
Right.
So I'm your host, Marissa Wood. Thank you for tuning into another episode of the Future of Finance podcast. Thank you, Lisa.
Great job.
And we will see you next time.
Thank you.
Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Union Financial Services are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. The opinions expressed by Marissa Wood and guests on this show are their own and do not reflect the opinions of this radio station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change change without notice. Investments involve risk and otherwise stated are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it's suitable for your specific situation. This program is designed to provide accurate and authoritative information with regard to subject covered. Index or fixed index annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charge as described in the annuity contract. Guarantees are backed by the financial strength and claims paying ability of the insurer. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.